So, at some point earlier, we were talking about Wells Fargo. I thought immediately about companies like HSBC, various other operators out there that have been involved in scandals similar to Deutsche Bank. And so Deutsche is not really the only one. There are
For
others.
sure.
So when you talk about the three challenges that Deutsche faces, how systemically do you deal with that when there are all these other companies that have similar, if not as deep-seated problems?
Right, and I would say the thing that distinguishes Deutsche Bank here is that it's not like it's fallen into one or two scandals. It's been at or near the center of just about every major financial scandal in the world in the past 15 years, which is really quite a remarkable feat. How do you change that for an industry? Man, I don't know. The simplest kind of way to talk about it, but I don't know that this works, is through policymaking at a government level or a central bank level. And you cannot fiat cultural change, but you can change or require changes to compensation systems, for example, that would do much more to reward a performance of an overall company, or as opposed to individual traders or even a trading desk. For every solution like that, though, there's almost inevitably a million ways to exploit it and to find loopholes, not to mention unintended consequences of doing that. We've seen that in the UK with some of the compensation rules that were introduced after the financial crisis there that have led to base salaries have gone way up, and the fixed or the variable portion of people's pay has gone down. And is that really? And that's not necessarily a good way of doing things either. You can argue that, and I think, in fact, you should argue that there should be higher capital requirements, tougher leverage ratios, and basically should discourage banks from operating as just these risk-loving institutions as long as there is this presumption that governments are going to come bail them out in a crisis. Because right now, it's a very kind of asymmetrical risk proposition for a bank. I mean, or for a bank employee, even more important, if employees are getting kind of a cut of what they earn for the bank, and they earn, let's say their group earns $1 million, and they're getting $100,000 of that cut. On the other hand, if they lose $1 million, it's not like they're losing $100,000. They get zero. And so it's a very kind of lopsided incentive structure that encourages you to shoot for the moon and not be particularly cognizant of the risks.
And it's not like there are any clawbacks per se. There's the whole thing, IBG, YBG, I'll be gone, you'll be gone.
Exactly.
When this happens.
Look, clawbacks have become more prevalent in the industry, and I think that's very healthy. Look, I think the industry, by and large, has made important strides since the crisis to reduce risk. And it's not because the banks are acting morally or ethically. It's because they're responding to investor demands and regulatory demands that their behavior change, or otherwise people won't invest in them, or they'll make it much harder to operate. So, look, I mean, I think you can, around the edges, it's easy for regulators or investors to kind of push for a more conservative, kind of leaner approach to banking. Banking shouldn't be that profitable, honestly.
I was going to say, I mean, what countries have successfully made the transition? The first country that came to mind for me was Switzerland. Because when you think about Credit Suisse and UBS, they were really at the center of the banking crisis, write-downs out the yin-yang, level 3 assets, topping up their balance sheet in order to get their capital. And now they're all about wealth management. They're all about, simple banking. They're really not about taking risks.
And that's partly a response to sky-high capital requirements in Switzerland that have just shifted the profitability of different business lines and made it so that sales and trading it's way too expensive from a capital standpoint to be worth doing. And yet they have, in part because of Swiss bank secrecy laws and tax laws, have a natural kind of long-standing competitive advantage in the field of wealth management, in part because of Switzerland's legacy of hiding assets for people. I mean, another example would be Iceland, which has went from, no one really cares about Iceland because it's Iceland, but it was the epicenter in a lot of ways of the financial crisis, in that it went, and this is essentially a fishing economy, the economy was financialized, and these huge banks rose out of nowhere and then collapsed because they were built on just, in some cases, fraud. And Iceland, instead of, just increasing regulation of the banks took things a big step further, which is that they pursued criminal charges against a lot of the bankers at the tops of these institutions, and they succeeded, and these people went to jail. And, you know, laws are what they are in different countries, but the act of personally punishing people at the tops of these powerful institutions, that is a deterrent. If a banker is scared, not just about missing out on a bonus or worst case scenario losing their job, but is instead scared about their reputation being destroyed or their freedom being taken away from them, that is a very strong reason to reduce your risk taking, whether it's cultural risk taking or financial risk taking or whatever. That provides you a very strong incentive to make sure that not only are you're operating within the law, but that 10 years later or 5 years later, looking back in hindsight, and when investigators are digging through your emails or your chat messages, that there is not going to be any prosecutor who could even argue that you were violating the law. That would change behavior in a very powerful, I think pretty rapid way, honestly. Now, again, we live in a country and society that has laws and respects the rights of defendants, and as well we should. But prosecutors in the U.S. in particular have been just very, very reluctant to pursue high-profile criminal cases against people in the finance industry. And that is, I think, part of the reason that there's been such populist anger over the past decade toward the financial and political class in this country. That it seems like a lot of people's lives were ruined by the actions that banks took, and almost no one at the top of those institutions was held legally accountable for that.
Okay, so let me just play devil's advocate here for a second with regard to Trump. The question is, if you're a devil's advocate, you would say, actually, Deutsche Bank, as you rightly point out, is an institution that's not well known in the United States. They're trying to make business in America, and so they take risks there, and the controls that are deficient there are only in the United States. That had the same thing happen in Frankfurt or London, it just wouldn't have happened that way.
Yeah, I mean, the special thing about Deutsche Bank is that it managed to create these problems all over the world. So, I mean, there's actually a similar situation to Trump that Deutsche Bank had out of its Frankfurt offices. There was a real estate developer in the mid-90s named Jürgen Schneider who was developing shopping malls and the like, and Deutsche Bank was one of his primary financial enablers. And in fact, some of the shopping malls he was opening were literally across the street from Deutsche Bank's headquarters in Frankfurt. And Schneider turned out to be a complete fraud and ends up, I believe, getting in a lot of trouble for that. And Deutsche Bank is caught essentially with its pants down. And they had made huge loans that they had very little recourse on, and they got wiped out on those loans. And so this is around the same time they're getting into bed with Donald Trump. And the circumstances in the US and Frankfurt are different, but this is clearly an institution that was throwing normal kind of credit underwriting, blocking and tackling skills, throwing it to the wind. And look, it wasn't just in Germany either. I mean, the bank was starving for profits all over the world and very hungry for the profits all over the world, I should say, and was doing whatever it could to satisfy its ravenous appetite. And so you look at a place like Russia, where the bank had operated for most of its history. You know, it goes back to the 1800s, where it was financing railroads for the Tsar. And Deutsche Bank took a lot of pride in Russia at doing whatever it took to satisfy its clients. And by the late 90s and early 2000s, through most of that ensuing decade, what its Russian customers wanted were money laundering or capital flight services to get their often ill-gotten rubles out of Russia and into foreign currencies like dollars or euros. And so Deutsche Bank set up a very elaborate money laundering scheme that enabled its Russian oligarch clients and others, including a bunch with direct connections to Vladimir Putin, to get their money out illegally. And this was, as were many of Deutsche Bank's schemes over the years, this was a great business for them. There were there were very few other banks willing to take that kind of risk for the obvious reason that it was illegal. But Deutsche Bank was minting money on this, and they were doing well over $10 billion of money they got out of Russia in an inappropriate way, and they were charging huge fees for the privilege of doing that because no other bank was willing to do this kind of business. And so Deutsche Bank, in this relentless pursuit of profits all over the world, kind of stumbles isn't really the right word. They go pretty deliberately across the line over and over and over again. And the result in the short term is that it's extremely lucrative. The result in the long term is that they face massive government penalties, in some cases criminal prosecutions, and their reputation gets annihilated.